Today, we're going to talk about what a CFO does, how to know if you need one, and how a CFO can transform your business. When most people picture the CFO, they think of the bean counter buried in a spreadsheet, fussing over budgets and nitpicking every last expense. We think of the no person, but the truth is today's CFOs are less accountants and they're more strategists. More and more, the best CFOs are coming from outside accounting. They're coming as operators, investors, and bankers. But even more importantly, they're good communicators who use finance as the language to guide strategy. And here's the thing, if you're a business owner, you're likely already partially sitting in that CFO seat. You're doing these things by yourself. But because you don't know how to do this well, you're doing it and struggling. You're doing it with partial information, and you're doing it and stressing about it. Today, we're going to break down what the CFO really does, why most business owners need one sooner than they think, and how a fractional CFO can give you the same strategic advantage without the full-time cost. But first, if you didn't watch the last video, go back and watch the video on what the CPA does. We're going to go back to the three jobs that I mentioned, the three types of accounting work. The first type of accounting work is transactional work. It's what the bookkeeper does. It's entering transactions, it's reconciling bank accounts, and it's making sure that all the I's are dotted and T's are crossed. Next, we have the tax and compliance work. This is the CPA's job. This is where they're doing taxes, and for businesses that have bank needs, they have loans, whatever that looks like, this is them providing audits or compliance paperwork for them. Remember, CPA is certified public accountant. We're not public, so we don't need all of the things that the CPA does. We only need a small portion of what they might do. And then third, we have the strategy work. That strategy work is where this CFO sits. The CFO helps you use numbers to grow, protect, and strengthen the business. We want to think of all of this in a spectrum. The transaction work, we're looking back and we're cleaning things up. The tax and compliance work, we're looking into the business. And the strategy work, we're looking forward. So if a CFO is looking through a strategy lens, you may ask, what does that actually mean? And what is a CFO? CFO stands for Chief Financial Officer. They're the senior finance leader in the business. They are not just responsible for getting numbers right, they're responsible for what the numbers mean and how you act on them. The CFO's role is best understood through asking these questions. Where should we deploy capital? What risks are we exposed to? How do we tell our financial story to bankers, investors, and employees? And how do we translate financial reality into decisions that move us forward? They're responsible for financial direction, capital allocation, and being the voice of the business to investors, bankers, and your team. The role looks different based off the size of business that the CFO is in, the size of business that you have. In big businesses, CFOs will spend most of their time on strategy and communication. In small and medium-sized businesses, the role can look different, sometimes still overseeing accounting, being involved in some more day-to-day elements, but the majority of their time should still be spent on strategy and maybe overseeing some different departments. So what does that mean for what they actually do? We can break it down into these 5 categories. We have strategy and planning, turning numbers into a roadmap for growth. We have capital allocation, that's reinvesting money, that's acquiring businesses, that's knowing how to distribute money to the investor, the owner, that's paying down debt, debt management, whatever that looks like for that business. We have risk management, which is protecting your cash flows, preparing for downturns, making sure that all scenarios are accounted for. We have communication. It's telling the financial story clearly to lenders, investors, and other employees. We're looking both internally and externally. And then partnering with the owner. And I think this is something that not all CFOs do well, but it's being a sounding board so that business owner is not having to make high stakes calls in isolation alone. A good CFO is not living in the weeds of the transactions. They're looking forward, helping you plan for the future, and making sure that all scenarios are accounted for. So within that, we may be saying, so if that's what they do, what don't they do? And I think this is illustrative itself. What CFOs don't do is they don't enter transactions. That's for the bookkeepers and accountants. They don't prepare taxes. That's for the CPA. And they don't just crank out reports. That is for the controller. CFOs build on and work with those people in those roles, but their job is to take clean, accurate information and turn it into strategy decisions, turning numbers into a direction for the business. As a business owner, especially early on, you do a lot of these things yourself. You're on top of everything. You're asking the questions, can we afford this new hire? Should we take on this debt or should we pay down debt? Should we make this acquisition? Are we taking on too much risk? Should we expand? Should we contract? You're sitting in the CFO chair thinking of the financial consequences of these decisions, but you often don't have all the context you need. And that's where a good CFO comes in. They can help fill out the picture of that context so you can start making smarter financial decisions for your business because you have more, better data at your fingertips and you have a thought partner to help you with that. You can stop second guessing, you can stop being reactive and start being proactive and seeing things more clearly. A good CFO brings perspective, strategy, and confidence into your hardest decisions. Along the lines of not just being a bean counter, a good CFO should create tangible wins for your business. They should unlock cash by examining the cash conversion cycle. They should boost profits by helping you improve your pricing strategies and improve your gross margins. They should help you with your debt, renegotiating new debt, finding the right debt, reducing the cost of that debt, whatever that looks like for your particular business. They should help you identify the right projects instead of just chasing all the projects. And they should help you plan for those difficult quarters, those difficult periods within a business. Because if you're in business long enough, those things are going to come. Here's the thing. You're now convinced I need a CFO, right? But most businesses or a lot of businesses cannot afford a CFO. A CFO is expensive and a good CFO is really expensive. But you don't have to have a full-time CFO hire to get this benefit. That's where a fractional CFO can come in. You get the same strategic benefits, clarity on growth, cash flow, capital allocation without paying for the full-time salary. For many SMBs, the right fractional CFO is going to cost nothing when you take into account the monetary benefits that you get from working for them. If they cost $5,000 a month, they should be returning you a multiple of that every single month. And the best fractional CFOs do just that. A CFO is strategy first, finance second. If you're expecting your CPA or controller to fill that role, you're likely going to be disappointed. You're missing a critical role with that strategist. And while not every business is ready for a full-time CFO, as we just shared, fractional CFO can often fill that for you as well. and they can often do it for businesses smaller than you'd expect. While our ideal client is, say, 5 to 25 million in revenue, annual revenue, we just helped a business just over a million in revenue. We created a plan to increase profits by 80%, right? So even small businesses can benefit from, if it's not ongoing support, one time or a short sprint support from a fractional CFO. So your CFO should be guiding the ship, helping you look forward instead of just looking back. If you think your business could use this sort of strategic help, I'd love to jump on a call with you. We have a link down in this description. Just go ahead and book a call. The call is free. On the free call, I'll offer you 2 to 3 quick wins that I think we can get you. And hopefully that in and of itself shows you the benefit of working with a CFO. Thank you for watching today. What we're going to talk about next video is we're going to talk about the role of a controller and what that looks like. Strategy only works. The role of the CFO only works if the numbers are right, and that's what the controller helps us do. So subscribe to this channel so you don't miss that video, and thank you for watching.